guys, been a while. Hope everyone's holding up all right during these crazy times. We wanted to come and bring you a video today, even though we haven't been on camera in a while. There's a reason for it. I need to get to my barber very badly, but there's been a lot of incentives put out there through the current stimulus package that can really benefit people and incentivize people to give back and donate to charity during a tough time. So not only can you go out, donate to those that are in need, that are less fortunate, but there's also a tax benefit to doing it. So today I want to go over three things. First, a way that just about every taxpayer across the country can benefit and get a deduction. The second is a little bit more advanced, probably going to be for the high net worth individuals. And lastly, for corporations to give back as well. For those that are maybe doing well during these times and do still have significant revenues, there's a way for them to give back and also get a deduction for it as well. So first, for everyone, right now for 2020, every single taxpayer can get a deduction on their tax return up to $300. So maybe a local charity, especially hospitals, they need money right now. Maybe you haven't given to charity in the past, but you really want to give back and help out your peers during this time. Right now, you can take a deduction up to $300 on your tax return. The reason this is important is in the past, you could only take charitable deductions if you itemized your deductions. So to give a recap on what that means, is every single taxpayer, when they file their tax return, they have two options on how they can take a deduction on their taxes. The standard deduction, which for individuals is about, let's call it $12,200. But for married filing joint, for couples, it's actually $24,400. So this is great. These are fairly large numbers and you can get a pretty big deduction here. But the other option is to itemize your deductions. So instead of just giving or taking that deduction that the IRS allows you to take, you can actually itemize, which means you list out all your deductions. Things like real estate taxes on your primary residence, state taxes, any mortgage interest on a primary residence, healthcare expenses that are unreimbursed, things along those lines. Now, in those itemized deductions is where charitable donations go. So if you don't itemize your deductions, you actually cannot deduct charitable contributions. And so now under the current tax code, it's gotten more difficult to itemize your deductions because if you're married, you have to have greater than $24,000 in deductions. But a lot of these itemized deductions are no longer available. You can't deduct them, or they've been reduced. So we found that a lot of people are actually donating thousands of dollars to charity thinking that they're going to get a benefit, a tax benefit, but they cannot deduct them because they're actually not itemizing their tax deductions. Gets a little complicated. We're going to film another video to explain how this works. But the good news is whether you take a standard deduction or itemize your deductions, you can now deduct up to $300 given to charity in 2020. So go out. If you want to give back, please go ahead and do it. We need all the help that we can get. Now, what's a little bit more advanced, maybe, like I said, for those that are very charitable or those that are maybe in a higher tax bracket and maybe higher net worth individuals, is those charitable deductions that you give, they're actually limited. So let me give you an example. If you make $100,000 a year and say you want to donate everything to charity, if you donate $100,000, you're actually limited to 60% of your actual income as the most that you can take in a given year for a charitable deduction. So you can only take $60,000 of that $100,000 that you put in. Once again, not everyone's doing this, but for some high net worth individuals, this could be a big incentive. So under the current stimulus package, they actually did away with the 60 and replaced it with 100%. So now you can donate and take a deduction to completely reduce all of your income in a given year. Now, this may benefit people that, maybe they have lost their jobs and they do donate to charity every single year. Well, instead of donating over the next 10 years, maybe you can make that donation this year and reduce your tax liability completely, right? There's a lot of advanced planning techniques using that concept. Do you donate $15,000 a year every single year? Well, now you can take a bigger deduction in the current year. So it may make sense to make that entire deduction for the years to come in the current year. There's a couple different ways to do that. Some you can, some you can't. But the benefit to you is that not only are you going to continue to give to your charity, but you can take the deduction up front. And then the last one is corporations, C corporations. Typically, they're limited to making a donation to charity of about 10%. Now, under the current stimulus package, that number has been increased to 25%. In fact, some restaurants or food providers, you can actually donate food and get a deduction for the value of that food that you're donating. So as you can see, there's a lot of incentives right now to donate to charity. Everyone needs it. During this time, I think it's very important that we all give back and try to pick each other up. But at the same time, all these benefits incentivize you as a taxpayer to donate and get a deduction for it. So thanks again, and we look forward to seeing people in person soon.